Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Public Service Enterprise Group Inc. quarterly report. The Public Service Enterprise Group Incorporated offers a diverse range of businesses and services through its subsidiaries. The company's main segments include electric utility, transmission, distribution, appliance services and repairs, gas utility, distribution, natural gas storage facilities, and metering and regulating stations, nuclear generation, power supply to nuclear power plants, solar energy, investment in solar generation, projects with 158 megawatts of installed capacity, energy efficiency programs, investments in related programs for customers. The company operates through two main segments, PSE&G and PSEG Power, serving residential, commercial, and industrial customers across the United States. Der Actionkurs der Public Service Enterprise Group Inc., PSEG, hat in den Vergangenen 12 Monaten kein significant Veränderungen erfahren. Die Analyse von Nachrichtenerainissen und deren Auswirkungen auf den Kurs zeigt, dass die meisten Ereignis zu einer geringfügigen Veränderung des Kurses führten. Die Erhöhung der Stammactiendividend im Februar 2024 führte zu einem leichten Anstieg des Kurses, aber nicht über die Schwelle von 70%. Die Bekanntgabe der Ergebnis für das Jahr 2023 und die regulären Quartalsdividenden im April und November 2024 hatten ebenfalls keinen signifikanten Einfluss auf den Kurs. Die Genehmigung des Vergleichs im Segtarifverfahren im Oktober 2024 führte zu einem leichten Anstieg des Kurses, aber auch nicht über die Schwelle von 70%. Die Bekanntgabe der Ergebnis für das Drittquartal 2025 im November 2025 führte zu einer signifikanten Veränderung des Kurses, aber bereits am nächsten Tag stabilisiert sich der Kurs wieder. Insgesamt fiel der Aktienkurs von Public Service im letzten Jahr 286%. Die Geringsbewegung des Kurses in den Vergangenen 12 Monaten deutet darauf hin, dass die Unternehmen und Investoren relativ zufrieden mit dem aktuellen Stand sind. The primary drivers of revenue growth or decline for PSEG can be summarized into several key areas. On the growth side, investments in utility capital programs to meet increasing customer demand, clean energy investment programs, and periodic distribution base rate case proceedings have contributed to a 26% increase in energy revenue and a 5% increase in other income. Additionally, transmission formula rates and existing rate incentives have also driven revenue growth. On the decline side, regulatory and political uncertainty surrounding federal and state energy policies, performance of financial markets, and increasing frequency and magnitude of cybersecurity attacks pose significant risks to revenue growth. Furthermore, market-related drivers such as commodity prices, interest rates, and weather and environmental policies can also impact revenue. Overall, PSEG's revenue growth is driven by strategic investments in clean energy and utility capital programs, while revenue decline risks are primarily related to external factors beyond the company's control. Net income and profit margins show improvement in 2025. The financial summary reveals a positive trend for the company's net income and profit margins in 2025. Net income increased by $102 million in Q3 2025 compared to the same period in 2024, and by $310 million year-to-date, YTD 2025. This growth can be attributed to various factors, such as increased revenue from operating activities, improved operational efficiency, and favorable market conditions. Profit margins also showed improvement, with operating income margin increasing to 26.6% in Q3 2025 and 26.8% YTD 2025. However, net income margin decreased slightly in Q3 2025, but increased to 19.5% YTD 2025. Overall, the company's financial performance indicates a positive direction, driven by its ability to manage costs and capitalize on market opportunities. The company is generating positive operating cash flow, as evident from the financial summary and various pages of the report. The net cash provided by operating activities has consistently increased over the years, with a significant jump in 2025 compared to 2024. This indicates that the company's operations are generating sufficient cash to cover its expenses, resulting in a positive operating cash flow. The company's debt level has experienced a notable increase. Long-term debt rose from $18,964 million to $21,666 million, representing a 6.3% growth. Additionally, the fair value of total long-term debt increased by 10.8%. This upward trend in debt levels is accompanied by an increase in interest expenses, which grew by 11.9% and 14.3%, respectively. These changes indicate that the company's financial obligations have become more substantial over time. Management is optimistic about the company's future outlook, driven by growing demand for clean energy. However, they are cautious about regulatory and legislative changes that may impact their operations. Key strategic plans include investing $21-24 billion in regulated capital investments from 2025-2029, focusing on T&D infrastructure and clean energy programs, and increasing investment in energy efficiency projects. Despite these efforts, the company faces several challenges, including regulatory uncertainty, performance of financial markets, managing costs, cybersecurity threats, and changes in federal and state tax laws. To address these challenges, management is exploring strategic options such as developing new nuclear projects, investing in competitive transmission and generation, and considering acquisitions or dispositions. Overall, management's outlook is uncertain due to unclear regulations and the impact of the Inflation Reduction Act on their financial statements. However, they remain committed to meeting growing demand for clean energy while navigating regulatory and market challenges. Acquisitions and divestitures overview. PSEG has made significant investments through acquisitions to enhance its energy efficiency and clean energy capabilities. Notable acquisitions include a $2.9 billion commitment for energy efficiency projects between 2025 and 2027, investments in transmission and distribution facilities, and nuclear capacity upgrades. These moves aim to modernize the system, improve reliability, and increase resiliency. On the other hand, PSEG has also engaged in divestitures to optimize its portfolio. Key divestitures include the sale of the Hudson Electric Generating Station site in 2018, retirement of $900 million in debt, and the sale of fossil generation assets. Additionally, the company concluded zero-emission credit (ZEC) sales from 3 nuclear plants in May 2025. These transactions demonstrate PSEG's efforts to adapt its business strategy and focus on clean energy initiatives. The company has a history of paying dividends, with detailed information available on pages 71, 89, and 90. This indicates that shareholders have received returns through dividend payments in both 2025 and 2024. That concludes the financial summary for Public Service Enterprise Group Inc. Feel free to comment below, and I will be happy to answer them when possible.